Hello, everybody. Hope you are all doing well here in 2022, our first stream of the new year. To those who have been waiting for the last 18 or so minutes for us to go live, thank you so much for your patience. We have a substitute in to help us with our stream today, and his setup is a bit different from our usual person who runs the streams. So Gary, shout out to you, and thank you for filling in and getting us live when we otherwise would be lost without you. I'm also here with Maxim, the founder of Santiment. Great to have you here, Max.
Yeah, thanks. Great to have you. Thanks for preparing everything.
Absolutely. For those who are hoping to see our pretty faces, we're sorry that we will not be able to be on camera today. There are some limitations to how we're doing the stream today, but the good news is everything is working just fine as far as screen sharing my screen, so we can still navigate along with everything we're saying in real time and see exactly how we are coming to the conclusions that we are, and be able to show you exactly how we look up our charts to find the pertinent data that helps identify market health and exactly what kinds of bullish and bearish divergences are out there. So that being said, as usual, I'd like to remind everyone that everything we go over on our streams is not to be considered investment advice. We are here to show objective data and analyzing based on historical evidence and what has happened in the past, when certain metrics go bullish or bearish, how to indicate the likelihood of where markets will go next. And we'll leave it at that and start here with the screener, where we're simply showing the top 100 assets in crypto right now. And the top 100 right now, as we can see in the past week, is mostly in the red. Bitcoin has, of course, dipped down to about 41.8. I think it got it down to around 41.5 at one moment, but it's very close to about a 3-month low right now. And Ethereum is not far behind. It got down to 31.18. That was the low that I saw, and it's currently just above 3,200. And most altcoins have been struggling a little more than Bitcoin and Ethereum. Many are beyond negative 20% in the past week. I've seen some negative 30s even. The numbers get even lower when you go past the top 100 market cap assets here. You do see a few exceptions here, of course. You know, Link has done well, Atom, Kunos X, of course. And we can actually look at it here on another screener that we've created through the filter system. All we did to do this was go into filters, type in any asset that has at least a 15% gain against the price of Bitcoin in the past week and has a market cap of at least $200 million. And that's how we have come up with a list of, it looks to be a total of 31 assets. And we've sorted them from largest to lowest gainers against the price of Bitcoin. And that shows us that Kunos X has been doing very well, Akash Network, Keep3RV1, Cosmos, Harmony, etc. A few of them are in the top 100. I think it's only these, only 5 or 6 of them are in the top 100, if I'm estimating correctly. But many of these you may not have heard of. Obviously, Quant you've heard of, but these are a lot of kind of abstract assets here that have really been gainers. So overall in the top 100, as we go back here, not a lot of great results outside of maybe 10 or so. So long story short, it hasn't been a good week, but with it not being a good week, that brings opportunity, right? You've all heard by now the common notion that you should buy dips. And that is sometimes true, sometimes not. The good thing with having sentiment data is we can actually look into the nitty-gritty of whether market health looks better than prices are justifying right now. And when that is the case, obviously that is a signal that it should be time to buy the dip. And it all starts with Bitcoin. So it's generally a good idea for us to start by looking at some sort of charts, some charts for Bitcoin to give us some indication as to whether Bitcoin itself is looking okay. Because if Bitcoin's looking okay, many of the big dips that exceeded Bitcoin's dips will be the ones to really keep an eye on, especially if their market health is starting to look okay. Before we go straight into Bitcoin's charts though, remember that we have our social trends here. This gives a pretty good indication as to what the crowd is talking about right now in terms of what's happening in the crypto markets, whether it be the dip, time to buy, BTC in general, Fed buying, stuff like this gives us, there's another one, like this gives us an idea of how people are reacting to this kind of price retracement and whether they're trying to load up and scoop up this dip or whether they're actually starting to get generally fearful and some FUD is starting to be the common narrative right now among Twitter, Discord, Telegram, Reddit, and other pro traders chats where we scrape data from. You can take a look here on our buy the dip or buy the dips chart that is showing over time. We have the last 3 months of data pulled up with each bar representing 2 hours. And we can see the largest time frame where we saw buy the dips being mentioned was here in early December when we had that big dip on December 3rd going from 57K all the way down to about 46K. I think it actually got very briefly down to below
Brian,
43K.
Sorry for interrupting. I think you're maybe hitting micro. There's like constantly sound like you're hitting something.
Oh, interesting. I'm not hitting anything with my headphone, but I'll try to be a little still with my head and see if that resolves things. Let me know if it happens, if it still happens, Max.
Yeah, okay.
So anyways, we saw the largest dips here happening in early December. And notice how right when the mentions of buy the dip started to die down, that's when the actual mini dip happened. And then of course it started to go back down again. We had a second wave of buy the dip. And it really continued to kind of fluctuate here until we had another major dip here that just occurred a couple days ago, where we really went from 46K down to now where we are at 41.8 or so, 41.9. And the mentions of buy the dip aren't nearly where they were here in early December. And that's notable. And it's actually a good thing. Generally, when the crowd has this big consensus that it's time to buy the dip, that is not the actual dip to buy. You might see a very small bump like we saw here, and people started to get their hopes up. But when the actual price started to come back down, obviously those mentions go away. And when mentions go away, that's an indication of fear. When there's fear, that's the actual reason or cue for you to get in and buy that dip. You can see plenty of examples of it in the past, even on short time frames. If I go back to like the last year, notice something like this. Back in mid-May, when we had the real big dip going from the then all-time high all the way back here of just above 64K, we were really starting to drop down, and it peaked when we hit about 37K. And you know, people got their hopes up a little. And sorry, I know there's a lot of colors here clashing, but people got their hopes up right here when there was a bit of a bounce, but not much. And when we started to see volatility, look at how eventually the buy the dip mentions started to stop. And when they slowed down, that's when we went on this huge run here until, of course, there were further dips. That's generally what the pattern will kind of foreshadow for us is when the large buy the dip mentions are high, you will see these small upticks to get people excited and FOMO back in. And with that FOMO, there's usually a second wave of dipping. And Maxim, I'm curious on your thoughts here if you're seeing it the same way I am. I'm seeing that this is kind of the second wave right now. We had our first wave of buy the dip last month, and now we're seeing a second one, but it isn't that large. What do you think is kind of coming up over the next week here, and whether we should be waiting for kind of a little more fear to settle in, or whether this is already kind of a sign that people aren't buying the dip at the rate that they were?
They do buy. The thing is, by the way, there is still some sound. I don't know what it is. Maybe
Sorry.
you have some robot
Yeah, I'll turn my headphones off and back on while you talk here.
Yeah. So there is one really important thing, and how I usually see it. And by the way, yeah, if you read this insight on our platform, the last one about this dips and how to analyze it, I wrote it a few days ago. It comes in waves. And of course, the first reaction of the crowd is after long bull run, yeah, this is an opportunity to buy in. This is your last chance before we go to, I know, 10,000, 100,000. So it's a normal first reaction. And of course, yeah, it's a wrong one. So over time, it gets lower. And yeah, now we're in the second wave of buy the dip. But even now already it's getting better. You have, I've seen a lot of negative and lower expectations, like calls for 30,000 as a normal, and all this kind of stuff. Ideally, I always say that there are always three waves or three spikes, both going up or down. It's just you use different metrics, but there will be like three pushes through the mental universe, and the last one almost not noticeable, and that's why it will be slow, and you will not be able or will be very difficult to convince to act. And this is the lowest risk, highest reward if you're able to catch it. But it's difficult, and yeah, I will stop here maybe a little later on. Now it's a second wave. I would expect we'll get third one. Yeah. But okay. That will be. But if we get the third one, and you will see on this chart like a third cluster, it will be lower, even lower what we have now. It's will probably be one of the indeed best chance to buy back. Yeah, let's form it in this way.
Yeah, gotcha, Max. And am I coming in okay now?
Oh yeah, very good, very good. I don't know what you did, but sounds very good now. Yeah.
I did this innovative thing where I switched my mic from headphones to webcam because there's a mic on the webcam. So hopefully this resolves it. But no, I appreciate the insight, Max. I agree that it's, three waves tends to be kind of a common pattern that we see in order for things to finally correct. We can even see kind of here, the first wave of buy the dip happened here, second was here, and then third one was precisely at the actual bottom. That won't always be this perfect. We wish it was, because then it would just be, the literal printing of money if it's set up that nice.
No worries, it will not be. It's difficult. Mentally, it's very difficult. Because at the real final bottom, there are many reasons for price to be there. It will be rationalized, and there will be, at the time, I think it was ban in China and shutting down of all miners. And I don't remember, there were other things. Probably prosecuting again, SAC against something, like really didn't look so good. So this time, and there will be against something. So convincing yourself, you need to go beyond, or actually below, rationality. You say, it is actually rational to act when everything looks so bad. It means everyone sold. So actually, you should be not afraid so much. There is not much sellers. The same like on the bottom, there are not much buyers left. So when everything looks so good, yeah, it's too good to be true. So when everything is bad, it means market overreacted. But it's difficult. Mentally, it's very difficult. It's a barrier to act on. So no worries. It's not money printing machine. It's difficult. And it's difficult to automate because it looks, when you write automation algorithm, you need to put in a specific parameter and time duration and stop losses and all this kind of stuff. And it's not straightforward. Sometimes it takes 1 week, sometimes it's 1 month. But when you look like we're looking now, it's very obvious. Yeah? So there is decreased activity of, in this case, crowd attention to let's buy the dip. But the other metrics is the same.
Yeah, so well said.
No money printing machine, no worries. You need human intelligence or human emotional intelligence to apply.
Of course. And that's why we only have one of these charts, or that's why we have to look at this as only one of many social charts that we have, I should say. We're of course looking at buy the dip, but we can combine the knowledge that we can extrapolate here with what we see on something like the short chart. I just took social dominance off for now, and we're looking at volume by itself, which each is representing 2 hours, just like on the last chart. And we can see that there isn't really much shorting going on. That we see maybe a very small uptick if we were to put trend lines on all dimensions of short. But overall, this is pretty much just run of the mill, and people are not selling the dip at any significant rate right now like they did here, where people were actually successful in selling the dip for a while. But I like to look, maybe more long term to see when, there was some serious interest in selling the dip. You can see that a lot of people were calling for shorts here, and for a very short time frame, for maybe 3-4 days, they were successful. But then people who were trying to sell the dip here really got liquidated. And same here, people who were really interested in selling the dip, lots of liquidations happened right there, and that'll be confirmed when we look at funding rate here. But right now, nothing really crazy going on. But when you do see a spike in shorting, or you can even add like, I'll put them together, so you can do short or sell or sold or selling, or even bearish, like 5 different negative words together. And you can clearly see when a lot of people are calling for, crashes to happen. Sometimes they're correct, sometimes they're not. But generally, when you see a huge spike like this, that is a good sign that liquidations are primed to happen. And if prices do go up, they go up in a hurry. So keep that in mind. The other one I have is crash here, where you can clearly see everyone was talking about the crash that happened last month when we went from 57K on December 3rd all the way down to 47K the next day. That is not really significant this time around. Obviously, the price hasn't retraced nearly as much, going from 46K to 41K, but that's still about half the, maybe just under half of the percentage drop that we saw a month ago. So it's no shrug off amount of retracement here, but not nearly the amount of people are panicking, or at least identifying this as a crash compared to what they were a month ago. So keep that in mind as well. That indicates there may not be as much fear as we would hope for. And fear, as Maxim stated, is kind of a good thing. It's something we want to be looking for right now. So we might need a little more fear, whether that comes from, dropping below 40K, or just some other fundamental event or China news that causes people to really start discussing the crash or shorting in large numbers. So that will cover our segment on social trends, and we'll look at a few other social metrics, looking at Bitcoin and Ethereum's charts here, along with plenty of on-chain stuff. So obviously, many of you are probably wondering how we're looking in terms of circulation right now, daily active addresses, and we can start right at the top of the many charts that we have set up here with circulation. And on circulation, we're seeing mostly a continued downtrend. It is still, despite this trend line, which is representing a 7-day moving average of circulation, we are still kind of above where we were in July, when things were looking really grim before we really started to rip upwards. That being said, the 7-day moving average was really peaked right around the time that the big dip happened on the 3rd and the 4th. And now it is starting to decline pretty significantly. So circulation peaked on December 5th in terms of 7-day smooth moving average at around 232.45K Bitcoin moving per day. Now we're down to 150.43. So give or take, if I were to shift and drag here, that is a retracement on the moving average of about 35%. If we look at overall the last 6 months, where we are now, or it is 6 months, I should say, we're still up 35% from where we were in terms of the moving average compared to early July. So bittersweet news there. On the short term, we are definitely down, but in the long term, we're actually still rising in circulation, and it isn't looking too bad. So based on this, we're not really showing a sign that we should drop all the way back to where we were, going below 30K on July 20th. But we also have another model here that we can look at to get a little more kind of zoomed out understanding of how circulation is looking compared to the market cap of Bitcoin. And what we've seen over the last 3 months before we entered January was a nice semi-bullish divergence where even though the price was falling, we were getting enough circulation, around these months here as we were rising. So like we peaked here in mid-November, of course, but look at how circulation was still rising. That's why this model was showing 3 months, or at least in October, November, December, it was showing why there was a justified amount of circulation to keep up with where prices were going. However, with circulation dropping here in January, we're so far through the first 6 full days of January seeing a bearish sign once again, because the price hasn't dropped enough to justify the much lower circulation that we're at right now. That can quickly turn, especially with only a 6-day sample size. But right now, this is a scary sign on the on-chain side of things because we're no longer in a healthy range like we were in October, November, December. And of course, the actual all-time high occurred in mid-November before, kind of seeing some volatility here, and now being as low as 41K or 41.5K or so. We're in kind of a scary red flag area due to the fact that circulation is not keeping up right now. Anything you'd like to add on the circulation sign, Max, before I jump into daily active addresses and others?
Yes or no, but I think I will probably cover it on daily active addresses. It's the approach which I usually use when I look in these metrics. You like to look behind the scene. Okay, why is the network active or non-active? So I consider always to be, to give a few examples. Price is dropping, network is slowing down activity. So there is a kind of disbelief or no need to be active. And then it spikes or it stays active. So people probably buying in the hopes that, okay, we're buying deep, this kind of things. So that's why I like models in general, and yours especially because you have so many. But I always also encourage people. Models are cool to get something like very fast, but then if you really act on a model or on some metrics, try to understand the underlying market participant dynamics. Why a matrix looks like this, and then you take into account the context, what happened before actually, yeah? And we've been like in our case, like in bull run, why the network would be active or why network suddenly drop activity, these kind of things. But it applies to both, to circulation and directive addresses. It's like very similar way of thinking, and by no means it's easy. Like I myself always challenged by this, but I always encourage myself and encourage all our listeners go always beyond models. But models are good, very good starting point. You'll get a lot. Yeah.
And remember, everyone, that you have access, as long as you're a Sandbase Pro member or you're on a 2-week trial, you have access to look at any of our models. And all you would need to do is go into the link that we send you. You'll go to File, make a copy, and then you'll have your own version. And with that version, you just add in here in Extensions, you add on your Sandsheets model right here, or Sandsheets plugin, I should say, right here, and then put in your API, and you're good to go based on the new copy of the Sandsheets model that we already have available for you. And then you'll see stuff like this, and it should all load just fine. If you're ever having trouble, you'll see something like all here with a yellow cell. You'll hit backspace, and then
I think Brian, something again happened. There is some noise. Could it be possible?
Oh,
or
okay.
like some disruption? like, but I don't know if anyone on the chat, can you drop a few lines?
Yes. Yeah, let me know. Let me know if it's still persisting.
Yes, it's still persisting.
Okay. Give me a moment.
It was good. It was good. Unless I talked too long time. Maybe it's a sign if I talk too long time.
No, you're fine. You're fine. I'm just gonna check my audio settings really quick because I don't want you guys to not be able to hear me. Let us try that. How does that sound?
Yeah, now again, good. All good, yeah.
Okay. Just keep me posted if it happens again, and I'll keep toggling my audio settings. All right.
Yeah, you'll keep changing settings. Yeah.
So anyways, that is how you download our Sandsheets models and can plug them in and basically check on them in real time, just like we do here every Friday. So daily active addresses, going back to it, we see that we peaked in terms of a 30-day moving average right around the all-time high. What do you know? And as soon as we hit this all-time high here on the 10th, look at how this pink line representing the 30-day average begins to just slightly flatten out. Now, it isn't a big drop by any means, and just like in circulation, early January is still looking a whole lot better than early July all the way up until really it caught up in early October. So we're still at about 3-month low levels, and we're exceeding the last 6 months right now. But it is a bit of a yellow flag that daily active addresses are moving down despite all of these polarizing drops that usually will trigger a lot of addresses either panic buying or panic selling, and kind of we get this big reaction. But the reactions aren't really there. We saw it, of course, a little bit in early December with these high spikes, but this time around, not that much, not that much. That being said, the network overall still looks good on the long-term scale. Let's look at like the last 3 years here. If I go to 2018, sorry, I'm getting the math wrong. It's actually 2019 is the last 3 years now. Still getting used to that. So 2019 up until today, look at how daily active addresses were back in January 2019. We were getting maybe 615K a day. We peaked here at about 850. Now our smooth moving average shows that we're at anywhere between 968 down to 925K. And that's still a lot better than we were way back then. However, the peak really was all the way back in late January of 2021, a little under a year ago, where we were getting well over 1 million per day at 1.15 million. So that's kind of the target. If we're really looking to get justified all-time highs again, we want to be well over 1 million, like we were a few days here, right around the actual all-time high, the most recent one here in mid-November. So really, for a rule of thumb on daily active addresses, as Dino said many times on the calls in the past, we look for 1 million or more active addresses per day as healthy levels at this price. Now, if we drop down to 30K or something like that, 1 million may not be necessary anymore for us to be in a healthy state. But when we're still relatively close to the all-time high, within 33% of it, we really want to be seeing a consistent bunch of million-day addresses, and that's something to look for. So moving on, we've touched on the two big utility metrics now, circulation and daily active addresses, that kind of show how often the network is being used in terms of tokens and addresses. Now we can take a look at one of our favorite metrics here at Santiment to kind of measure the amount of euphoria and the amount of pain on the Bitcoin network. Right now, we're looking at something known as the MVRV 30-day intraday metric. Generally speaking, when the MVRV gets high, that is a sign that the network is starting to become a bit overheated, because no matter what time range we look at here, you'll always see, no matter what the asset is, the MVRV averaging around 0% here, represented by this flat 0% line. When it is well over like this, especially 10% or more, that's a sign that a top may be near because too much profit is going on among the average traders. We're looking at a 30-day interval which is kind of a nice mid-range interval for swing trading, where it isn't too short like a 1 or 7 day, but it isn't too long like a 180 day or a 365 day MVRV. So we really like 30 day because it's kind of a mid-range metric where prices can be reacted to a couple days in advance as opposed to a couple hours or a couple months. So if I did draw a line here, say I go negative 15% as the cutoff line for a big opportunity zone, what I'm looking for is for the MVRV to dip below it, which the last time it did was in June. And when it did, notice how the price dropped just a little more and then had this big skyrocket up, and all of a sudden the MVRV is positive again. Alternatively, we'll draw a line at plus 15%, give or take. There we go. And look at the times that the MVRV was above 15% and how on most occurrences, we saw a big retrace. Even going back to June 2019, look at how this was the top right when the MVRV got well above plus 15%. You would have been just fine if you were selling even right here, right before that big top happened in June 2019. And then look, even back here in April of 2020, this was right around the first big all-time high of 64K for Bitcoin. And look at how prices started to top and level off here. I know it doesn't look like much of a percentage drop, but it is a bit of a percentage drop. It's just dwarfed by these larger spots here. And because we're not using a logarithmic scale, it's a little hard to tell. But more recently, you can see here last year, big retracement when MVRV got above 15%. Minor retracement here where there was some volatility and a lot of people panic sold here. Notice how the MVRV was going negative as we hit the all-time high in April. And then we saw another all-time high more recently in October, and things actually were going flat by the time we hit one extra leg up of 68K and above here in mid-November. Since then, after the huge drop-off, after that 68K plus all-time high, MVRV went negative, and it's mostly stayed there ever since. Most people right now are trading at a loss, or I should say the average percentage is trading at a loss right now to the tune of about negative 11%. And when we compare that to this real big opportunity zone, we can see that it's within range. Every percent lower than zero gives a bit more confidence level in it being a good buy zone. So it isn't necessarily in like a historically good buy zone like we would see if it was below here, but in a vacuum, if you will, this is a much better time to buy than average because there is pain in the markets right now, particularly on the Bitcoin network. So if we were to look on a model for MVRV, we have this trusty MVRV opportunity and danger zone divergence model. Essentially what this means is the closer you are to this green dashed level, which is more or less around that minus 15%, that means that you are that close to being in a historically good buy zone. You can see that it's refreshing right now, so it may take up to a minute to come back up. But long story short, when you see green bars on this chart, it's an indication that you are in a better spot than usual if you were to open a position in that asset right now. If you see red bars, it's the exact opposite. It means that historically, things are in a more dicey, risky area than usual based on history. You can look at this by asset, and as the bars continue to load, you'll see more and more things compiled and things change and adjust a little bit. But essentially the way it's calculated is it takes a 1 day, 7 day, 30 day, 90 day, 180 day, and 365 day return, blends them all together and averages out how close each of those 6 are to its historic buy zone or sell zone. And then the closer these bars are to either the green side or the red side, it will calculate that all together and spit out basically a standard deviation where +1 is +1 standard deviation is the time to buy, -1 is the time to sell. So if we go back to the MVRV here while it continues to load, if Bitcoin is in this kind of range, you would see it well above this bright green line right here. And right now, it has one more bar to compile, but this is more or less where we're at. It's about halfway or a little under halfway toward that really good opportunity zone. If it was just based on the 30-day MVRV, as we see here, which would match what we see on Sandbase, -11.5, then it would be in the opportunity zone for sure, but it's blending together different MVRVs, such as like the 90-day and the 365-day. I can show you that if we go to 365, click here, put it on that same chart. I'll take these off so they're not distracting. The 365-day just recently went back into the negative area. We had, around the all-time high, the average 1 year return was way up at plus 45, 46%. That's significant. That meant that people were still very, very profitable, even though, if you guys remember, the 30-day was more or less flat when we hit that all-time high. And then as soon as we started retracing, look at how gradually over the past month and a half, things have turned into negative range. So now the average return for 365-day investors is down to -14%. And that's a good thing. That means that, it may not be in a real historic buy zone, but all things considered, based on this metric, we're finally in a spot where it's justifying that buying right now is a lower risk than average. So one more time, jumping back here, looking at the 365-day, looking at Bitcoin, -14.9%, it's blending that along with 30-day, along with 6-month, 90-day, 7-day, and 1-day to give us this standard deviation, which is about halfway toward the opportunity zone. But with it being colored yellow-green, that means that there looks to be a better spot than usual to buy right now if you are worried about risk. It doesn't necessarily mean that just because it's in yellow, green, or green territory, prices are suddenly going to turn around. But like we said at the beginning of the call, not investment advice. We base our conclusions on historical evidence, and historical evidence points to this being a better sign to buy than usual based on network profit from other traders right now. While we're on this model, so that we don't have to repeat and come back to it anymore, we see that some of the best bullish opportunities, usually this means the ones that are in the most pain right now on their networks, include 1inch, AVE, Celsius, Ethereum, very interesting. We'll cover Ethereum a little bit toward the very end of this call, FTX token, REN, and Uniswap. So keep those in mind. Those are the ones that are getting very close to this historic opportunity zone, and they are in solid green bullish territory. The only one that isn't is Phantom. And this is, of course, only about the top 100 assets or so that we have data for. They're mostly ETH-based coins. So if you're looking for Cardano or Polkadot, you're not going to see them here. But Phantom looks to be the only one that's in overbought range, along with Chainlink, OKB, the Sandbox, and Unised Leo, which are in semi overbought range. So that'll cover MVRV. I know we're kind of starting to get close on time, so I'll try to breeze through a few others here without taking up quite as much explanation time. Social volume and dominance, we'll keep it short. Volume is looking average, while social dominance is finally picking up a little bit. Let me turn off social volume to make it easier to see. We really were down at the bottom in terms of the percentage of discussion of Bitcoin in comparison to the other top 100 crypto assets. And it was only being discussed at about 11 to 12% frequency compared to, look here, we were up at almost half, 47% of all discussions related to Bitcoin. So quite a stark contrast. Usually this is a slightly bearish sign. We want to see Bitcoin still being discussed and not have all the conversation be on altcoins, because with Bitcoin being forgotten about, it means that there is likely less investment going into that #1 market cap asset that keeps the rest of the markets propped up. So it would be like if you're into the S&P 500, whether you're American or not. I am, so I'll use a few American examples. If everyone is ignoring the overall S&P and only investing in like the top tech assets like Amazon or Netflix or Apple, that would be a sign that people are getting a bit too euphoric and we're getting like a tech bubble that's going on there. So that's kind of what is being shown here, is there's a little bit too much of an altcoin euphoria bubble right now still, which has of course cooled off a bit as people are becoming fearful and losing double-digit percentages in many of their altcoin investments. But we're not quite there yet where we'd want to be comfortable at 15% or above. Moving on to funding rates, I'll keep this brief as well. Let me zoom into just we'll do the last 6 months.
But just to make sure, funding rates, it's probably one of the most indicator which kept me personally away from bullish stance. You will show no data. It's like, yeah, you will show data. It's not negative. It's just regardless what's happened, there is not enough bear mood. I hope it will change now, but you always look in reality.
Yeah, definitely.
What I want to say is maybe spend a few minutes. It's in my opinion, together with these 3 spikes in social, which we discussed in the beginning, and then maybe some decline in network activity, it will be short. But I would like to see some short, kind of almost like freeze. So it will be sign of panic, or yeah. And then in decrease in funding rates. These 3 things, if they're aligned, like stars in the sky, then you can press your buy button. They're not aligned yet, or haven't been so far. So spend like at least a few minutes. It's a quite valuable piece, in my opinion.
Yeah, I agree. I think funding rate is probably a top 5 type of metric that can really help you get a gauge on where Bitcoin or any other asset is right now. And what Maxim's referring to is either the Binance or FTX funding rate. They're not really showing any signs like this. Let me take off FTX. I'll just look at Binance as a quick example. This would be a sign that people are very fearful, and there are way more shorts than there are longs in terms of history. And so shorts here are actually paying longs to a leveraged degree to try to profit on the price going lower. And as you can see here, as the funding rate got really negative for Bitcoin, that's when the prices rocketed up and all of these funding rates, or at least a vast majority of them, got liquidated. And then again here, where there were a lot of non-believers and anyone who held their shorts all the way through here likely did not have a very good time. And then notice when the actual drop happened, the funding rate was already flat again. So generally speaking, this is kind of just like MVRV, where the more negative it is, the better historically of an opportunity it is to buy. Conversely, when you see big spikes that show that longs are paying shorts, that's historically a more risky time to buy, because there are already so many leveraged longs that are expecting the price to continue to just climb, which of course it didn't. So right here, a lot of those longs got liquidated and suddenly the funding rate is flat while everyone is waiting for the next thing to happen. It started to go negative here, and Maxim, who's super diligent on watching the funding rates, probably said, okay, now everyone is starting to short again. This is a good opportunity for the smart money to get in. And that, of course, turned out to be very much true, with the all-time high in October and then an even higher all-time high occurring in mid-November, while there were a lot of leveraged longs happening again. So if we were watching the funding rate, this would be a sign that it's probably time to take a lot of profit and reduce your risk, because everyone else I shouldn't say everyone else, but many people to a higher degree than usual were putting up leveraged longs here, trying to ride the wave. So now we're in flat range again, and that essentially means that everyone is kind of waiting for things to start settling. And once things settle in a range like we saw back in September, that's when people will either show signs of trying to long or trying to short. And depending on which direction starts to show a very common trend, that's how we can react here on Santiment to what the next move is likely going to be. So that's enough on funding rate.
Yeah, good point. And just to finish, based on the price action now, there is a chance we will get to negative territory. Yeah? So in the next 24 hours, I believe, if you are serious about, or you want actively monitor situation at least, you need to pay attention. You use as an example Binance, but also FTX is good, DYDX for Ethereum based. We have, I think, most of them, if not all of them, on the Sun-base. And now is the time to pay attention to them.
Yeah, and DYDX is brand new, by the way. I think we added it just in the last couple of weeks. So you guys can now look at three different exchanges. Or sorry, 4, because we also have BitMEX still. So yeah, DYDX looks mildly positive as well right now, just like FTX did. They both have hourly updates instead of Binance, which only updates every 8 hours. So if you're interested in looking at something more granular, DYDX and FTX would be a nice alternative, even though their market caps aren't, or volume, I should say, isn't quite as large as Binance's. Okay, mean dollar invested age, no real updates. It looks like dormant tokens are continuing to rise right now without a lot of resistance. So keep that in mind. That's a mildly bearish sign. Weighted sentiment, we did want to take a couple minutes on this one. We are in what looks to be, and I believe this is a legitimate drop. You can correct me if I'm wrong, Maxim. It's what looks to be a pretty historically bearish territory right now, where a lot of people are showing fear. The way we calculate, as I zoom out a little bit more, the way we calculate weighted sentiment is we take the overall volume of all BTC or Bitcoin mentions, and we multiply by our ratio, a proprietary ratio that we use that calculates the amount of positive versus negative comments among Twitter, Reddit, Telegram, Discord, and some pro traders chats that we scrape data for. And right now, we're at about negative 1.5 standard deviation against the usual ratio of weighted sentiment, meaning there's a lot more negativity than usual, both due to a little less mention of Bitcoin due to disinterest, along with negative commentary where people are saying, you know, Bitcoin is bad, or you shouldn't get into it. It's a bad investment. I'm bearish, I'm shorting, whatever the case is, our algorithm will scrape that data and blend it all together to give us an indication that it is indeed being negatively regarded compared to its normal rate. And the last time that we were in this negative of a territory was way back right around, interestingly, the all-time high or initial all-time high that happened back in mid-April. And then we went from basically 64.6 down to what looks like 53.3, which was a 17.5% drop in just about a week. And for many, this was the first really huge drop. Obviously, there were a few others on the way, but this one was even bigger. This was the real first big, huge drop that many had experienced in quite some time, because up until now, it was like Black Thursday that had occurred the year before, and it was mostly just a rocket launch up to the then all-time high. So this caused a ton of negativity here. And generally speaking, it works kind of like MVRV and funding rate. The lower it is, the more negative people are, and you want to buy into that negativity. Alternatively, you want to stay away from spikes like this. So we had a few that occurred on the all-time high that occurred in October, and then an all-time high that occurred about a week before the actual all-time high of Bitcoin here. And these are the spikes that kind of give you warning signs saying people are getting very euphoric. There's a lot of optimism despite how much the price has already risen, and you want to stay away from that. Even back here, when the dip had happened, it kind of works the same way our buy the dip charts work. Everyone was saying, oh, this drop is no big deal. We've seen the crypto's been going up nonstop over the past year. So just buy the dip and you'll be fine. And look how the optimism kind of faded and actually became negative here by mid-July. And once it became negative, what do you know? That was the actual bottom. So right now, we're in kind of a similar territory where we're seeing a ton of negativity. And all things considered, this metric alone would be a very bullish sign that things can at least temporarily turn around until we get out of this consistent negative zone that we've been in. I like to sometimes turn it into a 7-day chart just to smooth things out. You can also go here and move up smoothing, which kind of gives a bit of a smooth moving average. And you can see here, it's pretty clear. There was a lot of optimism back here in mid-May, and then it became negative right when it became super negative, rocket launch, right when the all-time high happened. And we were in super positive territory with a standard deviation of above 1.2, major drop. And now we're back here in super negative territory. Now it hasn't lasted very long when you kind of get a little more zoomed out and smooth like we have the metric now. But all things considered, this is a pretty good sign that there's a lot of fear and pain going on the network. Anything to add on this one, Maxim? Maxim may have stepped away. So yeah, that's weighted sentiment.
No, sorry. Yeah, indeed.
No worries. Go ahead.
Yeah, this one is good. This metric in a good position. So you should generally be prepared for recovery. Yeah, in a good position. Just a few other pieces are missing.
Okay, so that's weighted sentiment. The last thing I'm going to show on Bitcoin before we do just a quick run through on Ethereum would be whales. And while I'm looking up whales, Gary, if you want to queue up, don't tell me now, but maybe in like 5 minutes, just tell me which altcoins people are requesting, and we'll do a quick rundown on a few alts, particularly those that are F-based guys. Those are the ones where we'll have the most data and can paint the clearest picture as to what the market health is looking like for that particular asset. So if you can do that, Gary, that would be great. In the meantime, what I'm showing right now is the percentage held by different whale tiers on the Bitcoin network. We're showing the 100 to 1,000 address tier here in pink. We're showing the 1,000 to 10,000 address tier in red. And then the yellow is combining both the 100 to 1,000 and 1,000 to 10,000 to just give us a 100 to 10,000 address percentage of supply held. So I'm going to turn off the pink line and the red line and just focus on this bracket of what we consider to be the top group of regular traders who are considered to be whales. These are all addresses that are millionaires all the way up to hundreds of millionaires. I don't think it quite goes into billionaire territory, but it is kind of that bracket where the vast majority are not quite considered to be exchange addresses, which would cause a lot of noise and kind of dilution to the importance of this metric. So what we're looking at really is the whether things are moving up or down in terms of the percentage of supply held by these large retail traders. And right now, the answer is they are definitely shedding, and it hasn't stopped yet. We were at a peak for this tier of about 49.5% held, and now they're down to 48.5%. That may not sound like a big deal, but historically, if this group of traders has actually shed a full percentage of all of Bitcoin's supply, that's of course billions of dollars. The market cap, just 1/100th of the market cap of Bitcoin is several billions of dollars. I won't do the math right now, but it is a lot of money. You can see if I drag it across, the overall drop, was 1.01% shed here in the last month, or sorry, 2.5 months. If I zoom out here a little more and I go to, let's see, we'll do the last 5 years. So January of 2017 until January of today. Look at what a difference or how rare it is to see just a 1% drop. You see them happen a few times, like here in February of 2019. Look at how the price dropped right as they were starting to sell until right here when they started to accumulate again. Again here, look at how they started taking profit right at that first all-time high of 2021 in April. And right when things started to get bottomed out, they started accumulating a little before the actual bottom. But all things considered, when you see these drops here in whale accumulation, it's a sign that there might be some evident drop in the near future. On the alternative end, if you start seeing an accumulation pattern like this, where they went from in April of 2020 up until April of 2021, so this year, or basically a full year between early 2020 and early 2021, the price jumped 617% for Bitcoin, while these whales accumulated about 3.25% of Bitcoin supply. So that would be a pretty good sign that those who have the most at stake are accumulating more and more crypto. Right now, they've been shedding and the price has followed suit. They started shedding back in mid-October, as I said, and the price since the all-time high, give or take, this is of course an estimation because we're way zoomed out, has been about a 36, 37% drop. So what we would want to look for right now, if I go back to just like the last 3 months, we want to start seeing a sign that things are going up once again, like we saw for a very short moment from mid-November until late November. But right now, the continued gradual drop here would be a bit of a concern. And you can also look at it from a, not just a percentage basis, but an absolute percentage. So if I go merge 100 to 1,000 and 1,000 to 10,000, hit confirm, we can actually see just how much they've shed since they were at its peak. They were holding about 9.32 million Bitcoin collectively in late October, and they have dropped about 157,000 Bitcoin since that time, and now own about 9.17 million. So yes, that's only about a percentage of Bitcoin supply, but that is a lot, and it is pretty rare for them to drop that. So overall, whale behavior right now is looking bearish. And if you have anything to add to that, Max, feel free. Okay, I will jump over to Ethereum here, just for a very quick rundown, and then I will get Gary's altcoin suggestions that he's seeing from the chat. So Ethereum, NVT and circulation are looking pretty neutral. If we go to the NVT model, we can see that for the month of January, it's actually looking bearish, and we've been in semi-bearish range, which may surprise many of you, since the second half of 2021. And this comes right after we went through about a year-long stretch of being bullish. So right about here, even though Ethereum has essentially doubled even in the semi-bearish range, it's mostly done so because of Bitcoin's NVT starting to get better and better. So it's kind of trailed off of what Bitcoin's done. But all things considered, if you're looking to have more of a Bitcoin heavy or Ethereum heavy ratio in your portfolio, this would indicate that Ethereum's a little more dangerous than Bitcoin right now, based on just circulation alone. This is, of course, only one of many metrics. So keep that in mind. We'll go back to, if I can find the tab, there it is. We'll go back to Ethereum, look at MVRV really quick. And MVRV is actually looking very, very good in terms of the amount of pain going on for Ethereum. We're actually at our lowest point, at least in the last 6 months. Let me look in the past year. So yeah, we got lower here in May. So we're essentially at about a 7 to 8 month, no, not quite actually. It looks like late June. So call it a 6 month low for MVRV, which low is bullish in this case. and it is below that negative 15% line. Remember, this is only 30-day MVRV, so it isn't combining all of the MVRVs together, but for midterm swing trading, this is a historically bullish opportunity based on previous events. So keep that in mind. Very often there will at least be some mild bounce in this kind of range to get MVRV back up to at least, here below negative or above negative 10% again. And then it might get volatile again because, of course, everything is going to be dependent on how Bitcoin looks. So if Ethereum bounces, but Bitcoin doesn't, beware. But if both Bitcoin and Ethereum go up together, that might be a good sign that the markets overall are heating up once again. Social-wise, really nothing too special to report on. A bit of a gradual decline for social volume, and dominance is looking about average on Ethereum. I'll leave it at that. Funding rate, about the same as Bitcoin, mostly flat, a little more negative. We go to just the last month so we can see it a little better. So there has been, this is basically the flat line, and anything below it, this means that people are showing some short signs for Ethereum on Binance. And when we keep seeing these shorts, that's a sign that we are looking to be in a better spot than average because there are some liquidation opportunities. FTX is still looking mostly positive right now, but it was short here, interestingly. So a lot of these shorts actually took profit and were successful in the short down here, and now it's looking positive again. Otherwise, not much to add on the Ethereum side for funding rate. Daily active addresses, mostly flat right now. Don't worry about this bar, it's just the current date compiling, but look at the previous 30 days and you can see it's not really moving too much in either direction. Mean dollar invested age over the past month has not really changed. Let me go back to 6 months so we can see a little more. The last time we really saw a big drop was right after the Bitcoin all-time high, and Ethereum, I think, hit its all-time high here as well. So there was a lot of dormant tokens moving here, which would be a good sign. But since then, not a lot of dormant movement. So a bit of a concern there as well. Weighted sentiment, just like Bitcoin, it's in a historically negative spot at about negative 1.5 below standard deviation. That's a good sign because there's a lot of bearish calls. So socially, volume and dominance may not be showing much, but Ethereum is in a similar position to Bitcoin where there's a lot of short and sell calls going on right now. On the whale side, Ethereum's a little tough to gauge. Many different combinations before. I've looked at 10 to 100 to see what they're doing, 100 to 1,000, 1,000 to 10,000. It's tough to really find one particular bracket for Ethereum where you can see very clearly what the large retail holders are doing. But overall, it appears that, if I just look at like the 100 to 1 million by itself, which is a pretty commonly good bracket to look at, it's mostly down over the past 6 months, which is a concern. The million to 10 million, on the other hand, looks okay, but these are like billionaire addresses. So there are a lot of exchanges meshed in. I'm curious really quick, Max, if you have an idea on what you look for on the Ethereum side for whales. Because for me, I try to really just combine 100K to 10 million, and that's the best alpha that I've seen.
That's fine. That's fine. And I believe as long as we don't put here specific groups like liquidity pools, especially staking, and remove it from other whales, it will be difficult to use this metric.
Yeah.
I know that our devs are working on it. So let's wait till it comes. It's not like Bitcoin.
Good point.
Ethereum is very, how to say, very much used, or much more used than Bitcoin in very different protocols.
That's a good point. And that's probably exactly why there's so much noise with DeFi and all these other use cases for it, where Bitcoin is a little more clear.
Yeah.
Okay, I'll leave it there. And not much to report on for network realized profit loss or exchange flow for either Bitcoin, Ethereum, which is why I didn't really mention it too much on this stream. But Gary, if you want to give a couple altcoins, maybe just the top two. I will do a quick breakdown for about 10 minutes, and then we'll call the stream there. Sure. Okay, we'll do our best. Since these are non-Ethereum based coins, we're going to be a little limited in what we can show. But Solana is showing a couple interesting things on the social side as well as funding rate. Socially speaking, we'll take off social volume because dominance is the really interesting story right now. It appears that there is a pretty increased rate of discussion related to Solana compared to the rest of the top market cap assets right now. And it's being discussed at the highest rate since mid-November. I'm not quite sure why. I would presume that it's probably seeing a pretty big drop. And with it going down to about 135 after peaking at about 260, it's give or take lost about half of its market cap since that time. So there's a lot of interest in whether Solana can keep up this rate. Generally speaking, when you see social dominance spikes, it's a sign that the price is going to see some sort of turnaround. It's a little more evident when the price is spiking. So up here, for example, when we saw a lot of social dominance spikes going on, this was a sign that people were getting a little bit too euphoric, and it was prime for some sort of retracement so that it wouldn't be talked about so much. This isolated spike was, when it was at its most polarizing, and people were wondering if this was the dip to buy or the dip to sell. It ended up being the dip to sell for a little while longer until people stopped talking about it, and then it started to grow again. Right now, though, it's not really at a serious enough discussion rate to be looked at as like a polarizing asset that is primed for a huge, decoupled bounce against the rest of the market cap. But it's a sign that people are paying attention to this dip a little more than they're paying attention to the typical crypto asset dip for the top 100 assets in crypto right now.
Yeah, if I may add, and of course, as always, it's not investment advice, but I would wait for Solana, and you don't expect to hear it, but to lose 50% more, then it might get to the good levels. And I'm saying it because of many things I will not be able to explain in a few minutes. But from everything I know about markets since 2016, that will be a good buying level, 65. If market is to recover fast enough, 80, but not at the current level.
Gotcha. So are you, not to put you on the spot, but do you base this on kind of the 5-wave bands that you look at, or sort of support and resistance?
Among others, like the price action, how it looked like since the beginning. Amount of what you shown, so there is attention, it should disappear. There should be strong negativity. We do see it from Solana from time to time, but there should be strong and consistent. And these are the things that they're kind of still missing. But generally, it's just a price action. It's just a price action. It's normal for every new asset. It loses 80%. Each of them. No exceptions so far. I've never seen any.
Yeah.
And well, Solana has to do it, in my opinion.
Yeah, it's interesting. It feels like Solana's been around forever with the way crypto has kind of hyped it up in the extreme surge that it went on.
But it's very new one. It's just finished its first cycle.
Totally.
And
yeah. Has it even been around one year?
But this is, as always, not investment advice. Just sharing how I would see the things. And you see, you're showing a cool thing. This huge cluster in the middle, which you are showing. Yes, social dominance. This is where it was middle of crowd recognition, how cool Solana is. So the price should definitely come back to it and stay in this area for some time. And when the price start going back or down, it's quite often overshoots. That's why I'm saying, 80, 65, can happen anything. And we are already not so far away, so entering good range. And this level of attention, if we put over social volume and Twitter and all growth of all the social channels, everything clustered in this area where you see now dominance. So it was middle of the growth, and then last wave of bull trap. So all this who bought during bull trap, I'm really sorry, but they will be destroyed there. You can try to hold position, but it will be very difficult emotion, and always happens.
Gotcha. Yeah, thanks, Max. I appreciate the market call, and I'm sure the crowd does as well. It's always nice to have some extra insight, as you do, about Solana in particular. So I think Max said around the $65 range is the time to really look at it. And we'll see if it gets that low. But yeah, based on weight on social dominance, it looks like there's a very mild uptick in discussion right now, but nothing significant. Funding rate, nothing really significant going on either. We do see that the FTX funding rate has dropped into short territory, which it has not done a lot in the course of really the last 6 months. The most short that it was at was about a month ago with the big drop on the 3rd and the 4th. But right now it's barely in the short range. So it might be wise to wait until there's a little more negativity before jumping in, but all things considered, better than average on FTX, and really nothing but flatness going on the Binance side right now. So, very, very, very mildly bullish sign for a short-term time scale if you're looking to capitalize on buying the dip. Anything else I can add? Weighted sentiment looks to be very, very negative right now. I guess I'd say moderately negative right now, because we have seen it get much more negative back in June and July, when everyone was, calling it kind of a scam coin and a ripoff and all sorts of things. And when that happened, look at the major rocket launch that happens. Remember that weighted sentiment isn't going to solely make a price jump up, but all things considered, this is a better sign than usual that people are beginning to doubt the top 10 asset. Okay, and we'll call it there because it's a non-Ethereum asset. That's kind of our limitation in what we can show. We'll look at Avalanche, as Gary mentioned, and look at the same 3 metrics. On the social dominance end, over the past year, it's seen its moments. You really would have been able to confidently take profit back in mid-November if you were seeing its rise up to its then all-time high, and you saw all of these euphoric spikes. I shouldn't say euphoric spikes, but at least it was being discussed at a ridiculously high rate compared to what it's usually discussed at. Back here in June, it was discussed like 0.15 to 0.20% of compared to the rate of all discussions in the top 100. And then at its peak, it was being discussed at almost 2.5%. So that's absolutely massive compared to the normal. Right now, though, it looks like it's dropping back down and getting close to its usual resting rate that it was at back in the early half of the year. So not really much to say other than it is beginning to be ignored once again compared to where it was at back in mid-November at its peak. Funding rate, pretty much the same as Solana, except it's not quite in negative range anymore. It's basically flat on FTX and flat on Binance right now. So both of these exchanges are showing that there's really, it's kind of a wait and see time for traders who are trying to leverage long or leverage short. They're kind of holding out until the markets paint a bit of a clearer picture, and Bitcoin and Ethereum and some of the larger assets kind of stay within a range for a longer period of time. Once it does stay in a range, that's the sign for these leveraged longs and shorts that they should start to pull the trigger on their predictions. And then finally, weighted sentiment looks to not be doing too much. It's not quite as negative as Solana or Bitcoin or Ethereum. It's a little below average, but considering how flat it's been, it means that there really isn't even much discussion about avalanche compared to what we were seeing in October, November. All things considered, this is a mildly bullish sign because the lack of discussion means that it is under the radar a little bit, and this dip is not really getting the amount of attention that it could be. And of course, we are still about negative 0.4 below standard deviation. So that is a sign that people are overall bearish. It just isn't moving much within that range. So it means that there isn't much discussion, but the discussion that is being had is more negative compared to the norm, if that makes sense. So overall, Avalanche is looking pretty neutral with a slightly mild bullish sign overall. But that will, of course, all depend on how Bitcoin is looking and a little bit Ethereum. So stay tuned on Solana and Avalanche, and we're going to have to check out how it looks next week based on how the markets have performed. All right. I'm beginning to lose my voice, so I'd say this is a pretty good stopping point. I'd like to thank Maxim for joining. He probably will be joining me again next week as we continue to continue to go through the markets with you guys on a weekly basis. I want to thank all of you who stuck around and joined us about 20 minutes late for this stream. We'll be right on time next week, I can promise. And I want to remind everyone that today is our very last day of our promotion to get 35% off of your first month of Sandbase Pro. So if you want to become a member, today is the day to do it. If you'd like to go 35% below the normal $44 to $49 normal monthly rate, and we are more than happy to help get you set up. Just hit our intercom button on the website. You can email support@santiment.net. You can also hit us up on our Discord server. Gary's always great about dropping the links. And any other questions, feel free to message us on Twitter, message us on Discord. And on behalf of Max, I'd love to wish you all a wonderful and safe weekend.
Yes, and a good start into the year, despite all these price turbulences.
Yes.
Yeah, thanks for joining.
Thanks so much, guys. Really appreciate it.